The Indian economy has entered into a technical recession for the first time in history at the end of the first half of 2020-2021, according to the Reserve Bank of India, after an unprecedented decline of 23.9% in GDP in April-June, as estimated by the National Statistical Office on August 31st. The central bank has now cast that gross domestic product for July-September quarter is set for a contraction of 8.6%. India's economy probably shrank for a second straight quarter, according to a team of economists including Michael Patra, the central bank's deputy governor in charge of monetary policy, pushing the country into an unprecedented recession. Gross domestic product contracted 8.6% in the quarter ended September, the Reserve Bank of India showed in its first ever published nowcast, which is an estimate based on high frequency data. The economy has slumped about 24% in April to June. The NSO estimates for the second quarter expected at the end of November this year will formally bear out the extent of improvement that occurred in the quarter gone by, the RBI said in a State of Economy report. India has entered a technical recession in the first half of 2020-2021 for the first time in its history. The government is due to publish official statistics in November 27. The median forecast in a Bloomberg survey of economists sees a contraction of 10.4% in the July-September quarter. The Reserve Bank's number is buoyed by cost cuts at companies, which boosted operating profits even as sales dipped. The team of authors also used a range of indicators, from vehicle sales to flush banking liquidity to signal brightening prospects for October. If this upturn is sustained, the Indian economy will return to growth in the October-December quarter, earlier than projected by Governor Shashikant Das last month, when he pledged to keep monetary policy accommodative. However, there is a grave risk of generalization of price pressures, an anchoring of inflation expectation feeding into a loss of credibility in policy intervention, the team of economists wrote in the Reserve Bank bulletin. They also highlighted risk to global growth from a second wave of coronavirus infection. Consumers cut back on spending as millions lost their job, preferring instead to squirrel away cash. Preliminary estimates presented in the central bank's bulletin showed a jump in household financial savings to 21.4% of GDP in April-June, up from 7.9% in the same period a year ago and 10% in January-March. The bulk of these savings are bank deposits. Bureau Report.